Hello, friends. Something is happening across the country right now that is worth paying attention to. Retirees who have been collecting Social Security for years, people who settled into their monthly deposit, built their budget around it, and moved on with their lives, are going back and checking their benefits again. Not because someone told them to, not because SSA sent a letter prompting the review, because something shifted in enough accounts, in enough conversations, in enough unexpected deposit amounts that a growing number of people who thought they were done with the math are realizing they may not have been done at all. The question spreading through retirement communities, through family conversations, through comment sections on videos like this one is simple, and it is unsettling in the best possible way. What if the number I have been accepting is not the number I was supposed to get? That question has an answer, and for a meaningful percentage of the retirees asking it right now, the answer is, you are right, the number is wrong, and the window to do something about it is open right now in a way it may not stay open indefinitely. Today I am going to tell you exactly why millions of retirees are rechecking their SSA benefits right now, what they are finding when they do, what the most common sources of benefit discrepancies look like in real dollar terms, and precisely what to do if your situation puts you inside one of the categories where rechecking is not just worth doing, it is financially urgent. Stay until the very end. The last category I cover is the one generating the most rechecks right now and the one with the largest potential dollar correction for the people it applies to. And if SSA Now is the channel that gave you the first reason to recheck your own benefits, subscribe right now and turn on the bell. The rechecking that is happening across the country right now is not random. It is the result of people finding
information that SSA never sent them. This channel sends it. Let me start with why this is happening now, specifically, because the timing matters. The Social Security Administration has implemented a series of processing changes, policy updates, and calculation adjustments over the past several months that have collectively produced deposit amounts across the retiree population that do not match prior expectations in a large number of cases. Some deposits went up, some went down, some stayed the same when they should have moved, and the pattern of these discrepancies has been consistent enough that retirees who compare notes, in waiting rooms, in online communities, in family phone calls, are starting to recognize that what felt like an individual issue is actually a widespread pattern. That recognition is what is driving the rechecks, and what retirees are finding when they actually dig into their benefit calculations is revealing a set of common discrepancy sources that SSA's own communication has consistently failed to surface. Here is what they are finding. The first thing retirees are rechecking and finding errors in is their earnings record. Your Social Security benefit is built on 35 years of earnings. SSA pulls that data from payroll records submitted by employers going back across your entire working history. And in a system that has been processing payroll data for decades, much of it manually before the digital era, errors accumulated in ways that were never systematically corrected. A year where an employer submitted the wrong payroll amount, a period of self-employment where income was not captured correctly, a stretch of work in the 1980s or 1990s where records were transferred improperly during a company merger or closure. Each of these errors sits inside benefit calculations right now, producing monthly payments that are lower than they should be, and most of the retirees carrying those errors have no idea because SSA never flagged them.
What retirees who are rechecking are discovering is that the earnings record review is not complicated once you know where to look. You log into SSA.gov, you open the full earnings statement, and you go through it year by year, comparing what SSA shows against whatever records you have, old tax returns, W-2 forms, pay stubs, anything that establishes what you actually earned. The impact of a single incorrect year in the benefit formula is not trivial. Each year in your top 35 contributes to your average indexed monthly earnings, the core figure from which your benefit is calculated. An error in one year that understates your earnings by $10,000 can reduce your monthly benefit by $50 to $100, depending on where that year falls in your earnings history and how it interacts with the benefit formula. Over a 20-year retirement, that single error represents $12,000 to $24,000 in cumulative lost income. Retirees who are finding these errors right now and filing correction requests are recovering monthly amounts they were entitled to from the beginning, amounts that have been sitting uncollected for years because nobody pointed at the earnings record and said go check that specific thing. If you have not reviewed your full earnings record year by year, you are not done rechecking. Log into SSA.gov today and start from the earliest year you worked. The documentation standards for corrections are tightening over time. Older records are getting harder to verify as the years pass, and primary source documents become more difficult to locate.
Rechecking now while your documentation is still findable is meaningfully better than rechecking in 2 or 3 years when it may not be. Second thing retirees are rechecking: their Medicare premium deduction and whether the IRMA surcharge they are paying is one they legally have to pay. This is the recheck that is producing the largest immediate dollar recoveries for the people who complete it, and the number of
retirees who are discovering mid-recheck that they have been paying a surcharge they could have appealed months or years ago is significant enough to be its own pattern within the larger rechecking trend. Here's what the recheck surfaces. Your Social Security deposit arrives after Medicare Part B has already been deducted. Standard deduction is $185 per month. If your income 2 years ago exceeded certain thresholds, SSA applied a surcharge, called IRMA, that can add anywhere from $74 to $443.90 per month on top of that standard amount. The surcharge is based on a 2-year-old tax return and does not self-correct when your income drops. Retirees who are rechecking their deposit breakdown are discovering for the first time that the gap between their gross benefit and their net deposit includes an IRMA surcharge that was applied based on income from a year that no longer reflects their financial reality. A retirement year with a final full salary, a year they sold a property, a year they completed a Roth conversion. Income that existed once triggered a tier assignment and has been generating a monthly surcharge ever since, with no automatic adjustment when the circumstances that caused it stopped. The recheck that matters here is not just identifying that the surcharge exists. It is determining whether a qualifying life-changing event since that tax year makes the surcharge appealable right now. The appeal form is SSA 44. It documents the life-changing event: retirement, significant income reduction, property sale, death of a spouse, divorce, reduction in work hours, and requests an immediate tier reassignment based on current income rather than the 2-year-old return SSA used to set the surcharge. Retirees completing this recheck and filing SSA 44 are seeing monthly deposit corrections of $200, $300, sometimes over $400, not a one-time adjustment, a permanent monthly increase that follows them going forward because the surcharge they were paying stops coming out. If you have never broken down your Social Security deposit line by line and compared the gross amount to the net amount that hits your account, that breakdown is your recheck starting point. Find the deduction, find the amount. If it exceeds $185, find out which IRMA tier you are in and whether a life-changing event since your reference here makes you eligible to file SSA 44 right now. Download SSA 44 at ssa.gov. The recheck takes 30 minutes. The monthly recovery lasts for the rest of your retirement. Drop a comment right now and tell me honestly, have you ever looked at your Social Security deposit and broken it down line by line to see exactly what was being deducted and why? Because what I hear from this community is that most people see the net deposit and accept it without ever questioning what came out before it arrived. That acceptance is exactly what the rechecking trend is ending. Third thing retirees are rechecking: their benefit type and whether they are collecting the right one. This recheck is specific to 2 groups: surviving spouses and people who are eligible for both their own retirement benefit and a spousal benefit on a living spouse's record. For surviving spouses, the recheck is revealing a pattern that has persisted for years in SSA's field office counseling practices. Widows and widowers who contacted SSA at the time of their spouse's death were often given one option: here is your survivor benefit, here is the amount, here is when you will receive it, without a clear explanation that an alternative strategy existed. The alternative being the option to collect one benefit type now and switch to the other later when it would produce a higher monthly amount. What rechecking surviving spouses are finding is that in many cases the benefit they elected at the time of their spouse's passing was not the one that best served their long-term financial situation, and in some cases, a switch to the other option is still available, depending on their current age, their full retirement age, and how much higher one benefit would be compared to the other at different collection points. The survivor benefit at full retirement age is up to 100% of what the deceased spouse was receiving, including any delayed retirement credits they accumulated. For a surviving spouse who is currently collecting their own retirement benefit because nobody compared both numbers clearly, the difference between continuing on their own record and switching to the survivor benefit can be several $100s per month, permanently. Call SSA at 1-800-772-1213 and request a survivor benefit comparison review. Ask them to pull both your own retirement benefit amount and your full survivor benefit amount and show them to you side by side. Ask what the implications of switching would be given your current age and full retirement age.
That conversation is free. What it reveals may permanently change your monthly income. Fourth thing retirees are rechecking, and this is the one driving the largest volume of rechecks right now, is the base benefit calculation itself, and whether the number SSA produced at the time of filing was actually correct. This is the deepest recheck, and it is the one that produces the most surprise, because retirees who go through it are discovering that the benefit amount they accepted when they first filed, the number they have been receiving for months or years, may have been calculated on a combination of earnings record errors and formula application issues that nobody at SSA flagged because nobody at SSA was looking for them on the retiree's behalf. The recheck that surfaces this involves two things. First, verifying that the earnings years SSA used in the benefit calculation, the top 35, are the correct 35 years, and that each one reflects accurate indexed earnings. Second, verifying that the benefit formula was applied
correctly to those indexed earnings, and that the resulting primary insurance amount matches what a correct independent calculation would produce. Most retirees have never done either of these things, because doing them requires understanding how SSA's benefit formula works, and SSA's own communication materials do not make that understanding easy to acquire. But the retirees who are completing this recheck right now, often with the help of SSA representatives who are asked specific questions, are finding discrepancies that in some cases have been quietly costing them money since the day they first filed. SSA's benefit reconsideration process allows a retiree to formally challenge the calculation of their current benefit and request a review of how SSA arrived at the number being paid. Under updated SSA guidance, the reconsideration process now places more verification responsibility on SSA, rather than requiring the retiree to prove the error from scratch. Initiating a reconsideration today by calling SSA at 1-800-772-1213 and asking to begin the process establishes a retroactive eligibility date from which any approved correction reaches back. The longer the initiation is delayed, the shorter the retroactive window becomes. Retirees who are rechecking and finding potential base calculation errors are the ones who stand to recover the most, but only if they convert the recheck into a formal reconsideration request before more time passes at the wrong number. Here is why the rechecking trend matters beyond any individual account. Every retiree who rechecks their benefits and finds a discrepancy is a retiree who is collecting less than they were entitled to, not because of fraud, not because of a dramatic system failure, but because SSA's communication structure never built in a mechanism for bringing errors to the attention of the people they affect. The error sat, the reduced deposits continued, and the money that should have been in those accounts went uncollected simply because nobody pointed at the right thing and said, "Go check that." The rechecking trend is retirees doing collectively what SSA should have been doing individually. And the results? Corrections, recoveries, increased monthly deposits that follow people for the rest of their retirement represent real money returning to households that were entitled to it from the beginning. You are watching this video. You are part of the recheck. So here is exactly what to do right now. Log into SSA.gov and open your full earnings record. Go through it year by year and flag any year where the number seems lower than your actual income from that period. Break down your monthly deposit and identify every deduction. If your Part B premium exceeds $185, determine which IRMA tier you are in and whether SSA 44 applies to your situation. If you are a surviving spouse, call SSA and request a survivor benefit comparison before assuming your current benefit type is the right one. And if your base benefit has ever felt lower than your earnings history deserved, call SSA and initiate a formal benefit calculation reconsideration today. 4 rechecks. Any one of them could permanently change what lands in your account. Millions of retirees are rechecking right now. The ones who find something are the ones who looked. If SSA now gave you a reason to look today, subscribe to this channel and turn on the bell. Every discrepancy source, every correction process, every benefit recovery that SSA never volunteered, I bring it here so the recheck does not have to start from zero. And share this video with someone you know on Social Security right now. They have a recheck waiting too. Whether they start it today or never is often just a matter of whether someone showed them where to look.